All right, what's good, everyone? It's Fearing. It is currently August 28th, 2025. I'm doing the review on the trades I taken on August 27th, 2025, Thursday. However, we're doing this in a rather professional format, as this overall review is ultimately going to be how you're going to master the top-down analysis of Power 3 and market maker models, and then how you refine it with quarterly theory. So this is essentially just a WAP lesson covering a in-depth market review. So to understand this review, you have to first, we're going to overall go over our time frame narrative, the lower time frame market maker buy model that price is trading within, go over the trades, and then overall we can actually ignore the tomorrow anticipations. That was strictly for the daily outlook, and in fact what I had said is actually completely played out. But we're just going to be going over the first 3 points. So the first aspect in which we want to do is cover the higher time frame. Now, because this is not a daily market review that is done live, we're going to go as in much depth as we can. So the first step we take when analyzing, whatever given Power 3 we're trading. So we're trading the daily Power 3, more or less the 30-minute Power 3 going into market open. How we get into the daily Power 3, we have to understand where price is relative to our weekly Power 3. From there, we have to understand where monthly Power 3 is to understand the bias for the weekly Power 3. So you kind of get what I'm getting at. So the highest time frame Power 3 that we're going to start with is the yearly Power 3. What have we seen within our yearly Power 3? Well, we see that, and for context, indices, NQ, ES, YM, it's a naturally bullish market. We're pretty much trending higher 90% of the time. I mean, every single bearish move that we put in ultimately gets ran out and ran past every single time. It's only logical to see price play continuation off of that. Anyways, to play continuation off of that, within our yearly Power 3, we've seen that our yearly Power 3 opens up over here, January 2nd, 2025. And from there, we have accumulated over a few months from January all the way to February. Then ending off February, we manipulate down all the way until April, where April hits, starting the smart money reversal after reaching EQ of this range that we've been building over the last few years. We formed monthly cycle in a market sequential SMT. I'm not going to show that here, but you can go look at your charts for April 7th, 2025, and you're going to identify monthly cycle in a market sequential SMT. And from there, that initiated the smart money reversal. And since then, as of August 28th, or I guess the trade that we're covering is August 27th. So as of August 27th, we have simply been distributing higher. And what do we understand about Power 3? So there's only 3 stages: accumulation, manipulation, and distribution. And we use Power 3s to reference time, and logically thinking here, we should distribute until the yearly Power 3 ends. So what do we want to see going into each quarterly and monthly Power 3 following that? Well, we want to see continuation of that until the end of the year. So we're going to reference the current quarterly and monthly Power 3 that we're trading within. So our current quarterly Power 3 opened up at the beginning of July. And we can see over here that at the beginning of July, we open up right here, July 1st, 2025. And what we do is immediately manipulate lower. Right here, July 1st, manipulate lower into this daily SMTF, as we can see on the other indices, such as ES, would never trade it into that fair value gap, that BISI, while NQ did. Additionally, when we zoom in very closely here, we can see that NQ runs out the previous day low while trading into that daily SMTF, while ES and YM both fail to do so, if you look over there on those 2 indices. And so from there, we started the smart money reversal for that quarterly Power 3 and immediately expanded higher. Now, why do we only see such small manipulation within that quarterly Power 3? Simple. Because within our yearly Power 3, we've already manipulated a significant amount, 6,000 points to be exact. We've already manipulated down 600 points, or 6,000 points. So what should we logically assume next? That price should trend. And in a bullish trending market, what we want to focus on is very short retracements. We don't want to see strong retracements all the way to discounts of ranges. We don't want to see that. we want to see short retracements, you know, often just at the start of power threes, that immediately play continuation of the higher time frame. So we got that within our quarterly power three. So great. Now that means going into our next monthly power three, we want to see continuation of the yearly and quarterly. So now we are trading within the August power three. And what did we see at the start of the year? Well, start of the year immediately manipulates down, and that's where we ultimately are brought here. So August power three opens up here, the monthly power three manipulates down, runs out the quarterly DFR low, as you can see on NQ and on ES, while YM runs out the previous month low. As you can see right here, this is the monthly chart. As you can see, only NQ or only YM trades into that monthly BISI, runs out the previous month low, while NQ and ES both fail to do so. That gives us two different high time frame correction correlations, the monthly SMTF, the weekly SMTF, and quarterly cycle sequential SMT, which is labeled as the SMT with the previous month low. So that then validates and confirms the end of the manipulation within our monthly power three. So we should see continuation higher off of that. And we got that. Price then expanded higher. Following that, the previous weeks were traced back into OT of the monthly fractal distribution candle, which we are going to mark out here. OT of the monthly fractal, and that is what we were presented with right here. Monthly low, monthly high, return into OT of that. And very simple, that is literally all we got and all we needed. NQ trace down, taps into OTE of it, and since then we've been expanding higher. And that is what we were left with leaving last week. And as we know, power threes play off of each other. So the overall framework for the trade that I'm going to reference is this. We had the 6 a.m., 10 a.m., and 2 p.m. for power threes, all playing back to back off of each other. That same exact concept, but since it's entirely fractal, that same exact concept applies to the higher time frame as well. And what have we seen within our weekly power threes? We look over here, accumulation, manipulation, and now we're within the distribution stage. And we can break that down on a lower time frame to identify that. So go back here, we referenced the power three from 2 weeks ago. Sunday right here, previous week's low, previous week's high. Generally, we're just going to classify that as accumulation. To end off the accumulation, we then manipulate down into that monthly fractal OTE, as we can see that I marked out right here. And since then, that validated the smart money reversal, and since then, we've been distributing higher. That had been started right before the previous weekly power three ended. So that means what we want to see going into the next weekly power three, the one that we're currently trading within, we want to see continuation off of that. So we're going to go back to the previous day's power three. And before anything, again, we said we're going to refine with QT. How does QT refine here? Well, this monthly fractal is QT related, but we get to specifics. We can see down here that we have SMT with the previous week low, which is classified as monthly cycle sequential SMT. As you can see, NQ and ES both run out the previous week low, while YM over here fails to. So boom, we now have quarterly cycle sequential SMT, monthly cycle sequential SMT. What do we see when we zoom in within the previous weekly power three? Well, we also see that we also had weekly cycle sequential SMT. So after we form monthly cycle, that monthly cycle is then confirmed with price forming a weekly cycle. So the monthly cycle sequential SMT is, we get confirmation of that through seeing the monthly cycle sequential SMT. The monthly cycle sequential SMT is then confirmed through seeing weekly cycle sequential SMT. So boom, last week had ended off with 3-stage sequential. From there, price expands higher. As you can see, Friday, right before the weekly power three ends. And that initiated the distribution for the next week. So what do we think we're going to want to see going into the next weekly power three? We would want to see continuation off of the previous weekly power three. So if the previous weekly power three had done the manipulation, started the distribution, what we would want to see is continuation of that. It is that simple. So what would confirm continuation? Well, what would confirm continuation? Well, let's quickly reference what the previous weekly power three did. So obviously all that sequential SMT that we formed, but specifically we also formed a unbalanced range beneath us. Previous week high, previous week low. We're going to mark that out on all three indices, as you can see right here. So weekly power three opens. Again, we want to see classic continuation. We want to see classic bullish weekly power 3 development because our yearly, quarterly, and monthly power 3 are all bullish, all distributing higher. We want to see continuation of that within our weekly power 3s. So that is the plan for this weekly power 3. And again, for context, the trades that we're covering today was from the Wednesday, August 27th, 2025. So I'm going to quickly skip all the way to the start right before New York Open. Yeah, right before New York Open for the trades I had taken on Wednesday. So we're going to quickly study the weekly power 3. What have we seen in development so far? Well, within our weekly power 3, we see classic accumulation, which I'm going to cover here. Market opens, our weekly power 3 opens, right here. Accumulate, ending the accumulation, we manipulate down. Now, what actually confirms the end of the manipulation? That would be sequential SMT. And that was confirmed through seeing daily cycle sequential SMT with YM right here. So now this time around, YM puts in the lower low instead of the failure swing like we've been doing previously on the lower time frame, while also tapping into EQ of the range, as we can see right here, while also tapping into a new log from the start of the month. So seeing all this combined together, the daily cycle, EQ crack inflation, because as we can see over here, NQ and ES both failed to reach the EQ of the range, the previous week's EQ. That gives us a higher time frame crack correlation. That higher time frame crack correlation is now confirmed through seeing daily cycle sequential. And from there, the previous day expanded higher. So now going into this daily power 3, we want to see continuation of that. You guys get what I'm saying? Our yearly, quarterly, and monthly power 3 are all distributing higher. So we want to see continuation of that within a weekly power 3. Weekly power 3, we saw that continuation, and the manipulation was confirmed through everything I just listed. Now, what do you think that we want to see within our daily power 3? Continuation of all of those higher time frame power 3s, the weekly, the monthly, the quarterly, the yearly, all of them. If you are looking for shorts anytime when we're within the distribution stage of our higher time frame power 3s, you are putting yourself in a statistical disadvantage because, guys, seriously, we zoom out on indices every single time we put in a bearish, a short-term bearish move. It's like I just said, it's short-term. It always gets ran out. Every single bearish move that we have ultimately gets ran out, whether it is, on a daily chart, a weekly chart, a monthly chart, a 1 minute, 15 minute, it eventually gets ran out. Aligning yourself with the higher time frame power 3s that are all distributing higher is putting yourself in a statistical advantage. It is that simple. So within our daily power 3, which will go down in time frame and reference that, within our daily power 3, we want to see classic bullish AMD, classic bullish open low high close development within our daily power 3. So what would confirm that? Well, we're going to quickly reference what I had posted in my pre-market analysis for the previous day. So August 27th, 2025, pre-market notes. Everything I just listed, bullish higher time frame, distributing within our higher time frame power 3s. So far within our current daily power 3, we are having perfect bullish power 3 development. We accumulated overnight, as we were referencing back here, since 6 p.m. open, accumulated overnight. And then leading up to 9:30, we were beginning to manipulate lower. So quickly go right before 9:30. So going into 9:30, we were beginning to manipulate. So perfect bullish power 3 development, which would be perfect for continuation higher. And as we saw on my chart, I was drawing out the current weekly range, the weekly high to weekly low. Now, I stated in the call that this range specifically is not necessarily unbalanced because we've seen both buy side and sell side delivery already. So this entire move lower was all sell side delivery. This entire move higher was all buy side delivery. It was technically not unbalanced. So we didn't need to see EQ the range. I want to specify that. We did not need to see EQ the range, but it was just a reference point. You got it? It was simply a reference point, as we've stated in the past, that these points that we swing grade within our ranges, they're simply levels in which we can anticipate high probability setups to form. So simply marking out the previous day's range, seeing what else aligns with it. Well, we open up our new dogs. We have a ton of new dogs perfectly aligning with it. We also have our true week open, also aligning with EQ of the range. And on top of that, we also had, actually, yeah, that was just about it. And now for the last point, in which we want to reference from the pre-market analysis. I said going into New York Open, what would confirm higher prices would be some sort of lower time frame sequential, likely microcycle sequential SMT, unless we stall until 10:30. What is 10:30? 10:30 is a new 90-minute opening. It logically made sense for price to form either micro or 90-minute to confirm higher prices. Now, the biggest question I had within the trades I taken was, why could we validate microcycle sequential SMT as the only sequential SMT to expand price higher? Because Fear, didn't you say that we need higher time frame sequential SMTs to expand daily and weekly power threes? Yes, but what else did I say? Is that weekly power threes, or power threes in general, play off of each other. And what have we seen? This is the exact same framework in which it operates in. What have we seen within our current previous power threes? I want to reference a few different ones. Within our previous weekly power three, what do we see? Well, it ended off with monthly cycle and weekly cycle. From there, price expanded, leading us to our new weekly power three. So now within our current new weekly power three, we are playing within structure that was created from the previous week, which was created from the weekly cycle and the monthly cycle. From there, since we are trading within structure within here that was created through the monthly cycle and weekly cycle, we don't need to see another monthly cycle and weekly cycle. All we have to focus on is lower time frame sequential. So now within the previous daily power three that was playing within structure of the previous weekly power three, we then form daily cycle. We form daily cycle. I think we even formed 90-minute sequential. So now within our current daily power three, day after this one, we are now playing inside structure that was created through daily cycle and 90-minute sequential SMT. So are you hearing everything I'm saying here? We have quarterly cycle sequential, which started the entire monthly power three expansion. Confirmed through monthly cycle, weekly cycle, daily cycle, 90-minute sequential. We have 5-stage sequential SMT currently at the lows, and we continue to play off structure created through those sequential SMTs. We don't need to see any more higher time frame sequential. We already have it. Again, if we were to remove the entire power three aspect and simply focus on structure, just a pattern-based structure, this is what we want to see, and this is how it operates within. So boom, let me quickly draw this. So once our higher time frame sequential has taken place, as we're going to mark out right here, once our higher time frame sequential has taken place, all we need to see for continuation off of that higher time frame sequential would be a lower time frame sequential. So this is overall how it operates within. If we completely remove the idea of needing to see a higher time frame sequential for higher time frame power threes, we already had it. It was just within our previous power threes that were directly the previous week, the previous day, and now we're trading within structure created from that higher time frame sequential. So that's overall how it operates within. Now again, this will need some experience to probably understand that, but that is the introduction into how it works. So this is the overall framework for the trade I used, and here is the market maker model itself. So for context, again, this is the exact same day. I'm going to quickly drop down a time frame and reference the 1 minute. So actually, let me quickly go over to MMxM just so I can show my annotations. All right, so go back here. In fact, we'll go into replay mode just so I can show the candles as well. We go back here and we show the 4-hour power threes in which price was trading within. Again, 4-hour power threes represented the market maker model that we're trading within. 6 a.m. opens, original consolidation, expansion lower, first stage redistribution, second stage redistribution, smart money reversal. What had confirmed the end of that smart money reversal? Hold on, I had 2 charts here. So then what confirms the end of the smart money reversal was seeing everything that we were listing before. So we'll go back to the previous day, go back here. So EQ the range, multiple different new walks and new dogs, streak open. All of these line up together. Now, something else that I forgot to mention was the 1-hour fractal distribution. that also had perfectly aligned with that. Streak open, new walks, new dogs, EQ the range, seeing all this line up together, boom. We have every single higher time frame validation to confirm higher prices. But what is the one key we're missing? Sequential SMT. So the only reason that at market open we didn't short prior to my entry, or the reason we didn't long prior to my entry, was simply due to the fact that we did not have any sort of bullish sequential SMT whatsoever. We go back to New York Open, 930. What do you see at 930? Well, it's more of what we don't see. Well, we don't see any sort of bullish sequential. There's no daily cycle. There's no 90-minute. There's no microcycle. Meaning we wait. We sit out and wait. We let price develop until the next microcycle opening, which is at 945. What do we see at 945? Immediately at 945, we open and manipulate lower, forming microcycle sequential SMT. As we can see, NQ runs out the previous microcycle low, while ES fails to, and YM also fails to. So Q3 runs out the Q2 low. You got it? From there, we can then validate higher prices. Now, a common question was, my bad, Fear, why did you not long the first 15-second CISD? We had microcycle, we had everything else we listed, we had a 1-minute swing divergence. Fear, why did you not long the first 15-second CISD? The whole reason I didn't long, and for context, the 15-second CISD was right here. Why did I not long this? Because if you longed that, quickly played out, you would have been stopped out. You would have longed the CISD, been stopped out. Fear, why did I not long it? Simple. Well, it's actually not that simple, my bad. Now, to be completely honest, it's a completely valid loss, but because my model is so discretionary, we have to mentally decide in the moment to avoid setups like this. And the whole reason I had avoided this specific setup was simply due to the fact that we were, for a few reasons, we're closing below multiple different new dogs. We weren't, wicking them and bouncing off of them. We were closing below. We were trading below. We'll go back here. All that. We're trading below. 2-week open, same thing. We closed below. I wanted to see us perfectly respected. Additionally, and the most important aspect as to why I avoided it was due to the fact that we were not perfectly respecting the 1 hour fractal OT. 1 minute time frame, 5 minute time frame, both of them closed below. I didn't like that. I didn't like seeing us not perfectly respect the new dogs, the 2-week open, the 1 hour fractal. Seeing all this, I'm like, no, I'm not going to risk 15-second structure. I'm just going to wait for higher time frame to perfectly give us a setup. Higher time frame just being the 1 minute. I'm not going to take the risk, drop down to a 15-second. I simply am going to wait for the 1 minute to align. And that was the whole reason as to why I didn't, simply due to the fact of what we're seeing price disrespect all of these different confluences. From there, we manipulate down one more time, fail to have a 1 minute CISD. We run out this internal structure low, which for context has ultimately no value. And all I did at that point, and for context, I need to show the trade itself. All I did at that point was enter off of the 1 minute SMTF after forming a 1 minute CISD. Now, Fear, why did you wait for an SMTF rather than just enter right off the CISD? Simply because I was not at my chart. After we had failed to form a 1 minute CISD right here, I stepped away, went to the bathroom. When I came back, it was right as we were forming this 1 minute CISD. I didn't realize we closed above by a single tick. I was, just not looking close enough. Maybe I was too zoomed out. But I didn't realize we closed above by a single tick. Then the next candle displays is higher. I'm like, crap, I just missed my entry. And from there, all I did was, okay, I'm just going to wait for some sort of continuation. Continuation would be some sort of lower time frame, PD rate, correct correlation, confirm higher prices. And that is what we got here. So 1 minute CISD, 1 minute SMTF. As you can see right here, 953 is a for value gap on NQ, a for value gap on ES, and no for value gap on YM, giving us a 1 minute SMTF. While being within that 1 minute SMTF, what we end up doing is then form a 1 minute swing divergence. No, not a 1 minute swing divergence. It was just a 1 minute SMTF and a 15-second CISD. And actually, my bad. I don't want to get ahead of myself. I did not enter off the 1 minute CISD. I entered just a little bit before, as we can see based off the execution. My entire mindset here was, okay, I have to think logically, what if I was in right off the CISD? Well, my position would ultimately look like this. I'd be in off this CISD, stop loss at the low, but I missed it. I didn't miss it because I didn't like it. I missed it because I simply did not realize we closed above by a single tick. So I thought logically, I'm like, okay, 1 SMTF, that's already a lower time frame calculation. All I did was, okay, see price trade away from it, quickly respect it, trade away from it, and that was essentially my entry. 15-minute trades into it, immediately expands higher. That was my entry, and that was my stop loss. And my TP, for context, was all the way at what I had initially thought was the previous week high, but I was wrong. It was in fact just the previous Friday high. I've forgotten that our previous week high was just internal structure up here, not realizing that this was just the Friday high, which doesn't hold any value, but nonetheless, we can still use it as a external draw liquidity as well. It's just an external high. It can still act as a favorable draw on liquidity. But anyways, we reference the market maker buy model again, right here. As we can see, we zoom in, original consolidation, so on and so on, smart money reversal, displays higher. My entry was within the first stage reaccumulation, 1 SMTF, giving us an optimal entry. And from there, TP1 was at the high day, TP2 at the Friday high, the external high. And that's all there is to it. Now I'm trying to think if I missed anything. Ultimately, that's literally all there was to it. Now I taken an additional trade, and that was continuation here. Now Fear, why did you take continuation? Only because we did not reach that. Let me go back here. Only because we did not reach. I'm gonna go forward a little bit. Only because we did not reach my external draw liquidity. So I was still in this position when prices were tracing significantly here. What I saw in my eyes was the fact that, okay, we failed to run out that external high. None of my initial confluences for my entry was invalidated. Even though we completed the market maker buy model in the 1 minute, we are still bullish. Market structure is still bullish. So what I saw was this. We would trace all the way into discount of the range, the daily range to be specific, discount of the daily range. Within there, we form 90-minute sequential with YM here and here. YM puts in a failure swing and QES both run out the low, giving us 90-minute sequential SMT. While doing so, now again, this was a very high risk trade and this was not according to my model. So for context, my first entry, we had everything checked off for my model. We were trading the smart money reversal. So for my model, there's 5 points. Obviously, if you're watching this video, you should have watched that. But for my model, there's 5 different points to the checklist. The first point is clear higher time frame narrative, more or less playing in line with that higher time frame narrative. We already discussed that we're playing the distribution of every single higher time frame power 3, so that checks off. Clear external draw liquidity is the second point, and yes, it was clear. We already checked that off. So that's 2 things. The third thing is higher time frame sequential SMT. Again, we already checked that off based off of what we discussed here with power 3s playing back to back to each other. We had a quarterly cycle, monthly cycle, weekly cycle, price expands, more structure. Within that structure, we form daily cycle and 90-minute. So all of those, seeing all those, is pretty much our higher time frame sequential, because it can still be referenced because we're still trading within that structure that was created from that higher time frame sequential SMT. Then from there, the lower time frame, the fourth point was the microcycle. And then my last point for entry is the CRSD. That is my confirmation for entry. We already discussed that. And so that's everything checked off for my model. Now again, the fourth point, the microcycle sequential, aka just lower time frame sequential or lower time frame calculation. The issue with this trade was the fact that there was no lower time frame calculation, and that's what made it so high, so low probability. Obviously it played out and played out very, very well. That doesn't make it high probability. It was still incredibly low probability simply due to the fact that, okay, we had 90-minute sequential, but we didn't form a 5-minute swing divergence. All I did was enter off the 1-minute CISD. Now Fear, why were you able to do that? Only because of where we were rejecting off of. We were rejecting off of, again, if you're watching this video, you should have watched the fractal PSP video so you understand fractals. We were delivering from microcycle, so from a 15-minute fractal distribution candle. We had formed microcycle, as we already discussed, 15-minute, then distributes, giving us a candle to reference. from there, we perfectly retraced into that. It was this right here. So obviously you zoom in on TradingView, you see that we missed it by what? By nothing. It's simply just TradingView's data that is showing that it does not hit it. But when you look very closely, look at the numbers, 2, 3, 5, 4, 2. Look over here, look up here at the high, open, low, high, close. Look specifically at the low right here, the L. 2, 3, 5, 4, 2. While the specific data on NQ for the wicks and all that might be different, we are still hitting it perfectly when we use the numbers 2, 3, 5, 4, 2, 2, 3, 5, 4, 2. That still counts. We perfectly tap it. Again, seeing price perfectly tap it, being in discount of the range, forming 90-minute sequential, still having that clear external liquidity, that gave me conviction to enter and play continuation higher. And this was obviously taken on a different account compared to this, but those were my 2 trades of today, and that was the overall breakdown for the mastery of Power3's market maker models and how to refine with quarterly theory. Now, of course, if there's any questions regarding anything I covered, please just reach out and let me know. Otherwise, that is a in-depth review regarding the trades I taken on Wednesday, August 27th, 2025. So again, reach out if there's any questions. Otherwise, I'll catch you guys all in the next lesson.